11. Advantages and disadvantages of life insurance. Money is something you have to make in case you don't die. Max Asanas. The reason for life insurance is to give financial protection to surviving dependents after the demise of an insured person. There are basically two types of life insurance policies: whole life and term insurance. Whole life insurance coverage is more costly than term life coverage, but the payout that the beneficiary receives after the insured dies is tax-free. You can renew your term insurance policy when it expires, but the premiums will be higher, or you can convert your term policy to a permanent life insurance policy at the end of the term. Term insurance is a great option when you have kids or while you are paying a mortgage. You can also customize a whole life insurance policy with riders depending on your overall insurance needs. Such riders can include term conversion, disability income, long-term care, critical illness, waiver of premium, or unemployment protection. For example, for an additional charge, you can customize your whole life insurance to include a long-term care rider. Term life insurance is available in 10-year, 15-year, 20-year, or 30-year terms, and is renewable annually. A key step in buying insurance protection is picking your beneficiary. Your beneficiary can be one person, for instance your husband or your wife, or two or more people such as your children. By designating your beneficiaries, you have the final say over who receives your death benefits. Therefore, as your life changes, it is important to review your life insurance policies to make sure that you still have the right beneficiary designations in your insurance policies. Some of the questions you will need to consider are: who will require additional cash when you pass on? Are there individuals who rely upon you for money? Are these individuals who will bear certain costs at your passing? Who receives the funds if none of your beneficiaries survive you? Should the funds pass to your estate or your trust? With most insurance policies, you can change your beneficiaries at any time. You don't need to figure it all out by yourself. Contact your fiduciary advisor today to examine your specific insurance needs. Universal life insurance provides permanent life insurance protection with no need to renew the policy with higher premiums. And the death benefit paid to your beneficiaries is tax-free. With some universal life insurance policies, you can also build cash value and have access to cash while you are still alive. And the cash value that you withdraw from the policy is also tax-free. A special blend of universal life insurance and long-term care insurance coverage can provide you with death benefits to your beneficiaries, as well as with cash value to help with long-term care custodial expenses. It should be noted that the major advantage of the universal life policy is its flexibility in regard to frequency of payments and flexible death benefits. The advantages of life insurance are greater than its disadvantages. For instance, life insurance can be used for many functions in estate planning, including the following. 1. Term or whole life insurance can be purchased on an individual to provide funds for the surviving spouse or children when death occurs. 2. Whole life insurance can be purchased to provide income to the parents at retirement. This can occur by converting the policy to an annuity or by withdrawing the cash value. 3. Life insurance can provide dollars that can be passed on as an inheritance. 4. Life insurance can be used to provide funds for the payment of estate taxes, estate settlement costs, or debt obligations of the deceased. 5. Life insurance can provide income at the time of the parent's death for the buyout of land, machinery, or operating assets from other heirs, if the parents have distributed their farm assets equally among all their children. 6. Farming or business partners often buy insurance on each other. This process provides funds for buying out the deceased partner's assets if a premature death occurs. This enables the living partner to keep the farm or business intact. 7. Life insurance can be used to create or enhance an estate. It can be an estate building plan providing money to heirs. 8. There are some life insurance choices that enable people to draw on the death benefit to cover long-term healthcare costs. In summary, work with your fiduciary advisor to evaluate your life insurance as family, estate, and business needs change throughout your lifetime. Life insurance plays an important role in your estate planning. Depending on your overall financial needs, you can determine if term or whole life insurance plans are best suited for your needs. To learn more about life insurance and to identify the best insurance company for your needs, visit the following link: https://www.nerdwallet.com/blog/insurance/best-life-insurance-companies/